real quick, and recording is on. Can you just confirm if it's on, please? If it's on, right?
It's on,
Right.
yes, it's on.
Perfect. I will mute everyone. Welcome, everyone. It's Marcel here, and this is the usual Wednesday session. And we are starting every single Wednesday session with an educational topic. So this week's educational topic will be the difference between a strong change of character and a weak change of character. And this isn't a really complicated topic. So basically, it will be a few minutes, but it's really helpful. And you'll be able to understand the main trend and the counter trend differences on the change of character perspective. So let's just begin. And as you can see, I've drawn two examples, two separate examples. First, we will take a look at this first example. Okay, so first of all, what is a strong change of character and what is a weak change of character? Can you just show me what's the strong change of character and what's the weak change of character on this example, please? Just draw on my screen, if I can ask you. Weak, exactly, Ramona. And that's a strong, yeah, thank you. Thank you very much. So the difference between a strong and weak change of character is that the weak change of character only breaks above one structural high point. So this is the first and less recent structural high point, and the weak change of character only breaks above one structural high point. So this will be a weak change of character right here. I will mark it as a weak choch. This is a weak change of character. So the strong change of character will break through several high points / low points on the long trade. I mean the short trade. So the strong change of character has to break above several high points / low points. And in this case, this will be a strong change of character right here at this region. So this is a strong choch. Okay, this concept is really easy, right? Okay, understanding which one is strong and which one is weak is easy, but you have to combine this by the main and the pro trend. I mean, main and counter trend. So you can easily combine this by the main and counter trend. Let me just tell you how. So as you can see in this region, please let me just remove this line from here. How can I remove that? Sorry, clear. Okay. Mute all. Okay. So how can we use this in the pro trend? And which kind of change of character should we use in the pro trend? As you can see on the 15-minute chart, our pro trend is bullish because it's creating series of lower lows and higher highs and higher lows. And I will just draw some more highs and lows right here to be more precise and clear. So the 15-minute structure is bullish, right? Creating lows, highs, higher lows, higher highs, higher lows, higher highs. And let's say this is the last recent 15-minute demand zone that has caused the last recent 15-minute break of structure right here to the upside. So this was our last structural break of structure to the upside. And as you can see, after the break of structure, price has created a counter trend movement to the downside on this leg. So this 15-minute leg is a counter trend movement. If you don't really know how to identify the counter and main trend, please just take a look at the Telegram video. There's a video about this in the Telegram channel. That was also a webinar session topic. So yeah, the title is actually counter and main trend. So just please take a look at the video if you don't already know how to identify the main and counter trend. So let's just begin and move on. So this movement on the 15-minute chart is a pullback of the main trend, right? So this is the main trend. All of the up legs are the main trend movements. All of the down legs are the counter trend movements. So on the 1-minute chart, this leg will look like this, right? Creating series of lower lows, lower highs, lower lows, lower highs. But this is a counter trend movement according to the 15-minute chart because our 15-minute trend is bullish. So the 1-minute downside movement will be a counter trend of the 15-minute chart. Okay. Let's say price steps into this 15-minute demand zone right here. And this 15-minute demand zone looks like this on the 1-minute chart. So the 15-minute demand zone is being tapped on the 1-minute chart, right? What do we have to wait after a 15-minute demand zone is being tapped in the main trend? All we have to do is wait for a weak change of character because our trend is extremely bullish. Our trend is following the bullish structure. So creating lower lows, higher highs, higher lows, higher lows, higher highs, higher lows over and over again. We need a single weak change of character because that will be perfectly enough to reverse price and continue the main trend movement to the upside. And this can be combined by the 15-minute POIs / 5-minute POIs, as I said. And these are the best to be combined with the 15-minute / 5-minute POIs. So in this case, if the main trend is bullish and you're following the main trend, and after a 15-minute demand tap, a price creates a weak change of character, so only breaks above one structural high point, that will be more than enough for you to enter in a position. So this is more than enough for you to enter in a position. You will be able to simply put a limit order on this freshly new created, you will be able to put a limit order on this freshly new created 1 minute character changing demand zone, because this 1 minute zone, let me just make it much more clear. This is the 1 minute zone, this is the 15-minute zone. So this 1 minute zone will be able to reverse price to the upside if you're following the main trend. So in the main trend, a single weak change of character will be perfectly enough. And you can combine this, of course, with liquidity creation. So if there will be a liquidity and a continuation trade, breakout structure, etc., this will be a perfect criteria setup. This will be your best textbook example setup. Okay, this is for the main trend. But which type of change of character should you use in the counter trend? So take a look at this. Let me just move these a bit further away. So take a look at these. Okay, so the main trend in this scenario is bearish, right? Price is following a bearish trend, creating a series of lower lows, lower highs, lower lows, lower highs, creating breakout structures to the downside over and over again. So here was a breakout structure, here's a breakout structure, here's an expectational breakout structure after the top of this supply zone. So yeah, price is following a bearish trend. Just take a look at this 1 minute chart. So this was the last recent 15-minute supply zone, which has been marked right here. So this is the last recent 15-minute supply. And I will type it right here once again. Last recent 15-minute supply. So, sorry. This is the last recent 15, this is the last recent 15. Okay, these 1 minute movements are the main trend of the 15-minute chart, right? Because the main trend is creating breakout structures over and over again, respecting supply zones over and over again. So these downside movements are the main trend movements on the 1 minute chart. And these upper movements are the counter trend movements on the 1 minute chart according to the 50-minute, right? So all of the upside movements on the 1 minute chart will be considered as the counter trend movement according to the 15-minute chart. Okay, so how can you actually trade this counter trend trade? You have to wait for a strong change of character. So you have to wait for at least 2 structural high points to be broken. And of course, on the long side, you have to wait for 2 structural low points to be broken. So these are vice versa. So if price reverses right here after the last recent breakout structure to the downside, after following the trend and reverses for a pullback, you have to wait for a double change of character, so strong change of character, in order to take any long trade to the upside. So if price creates change of character right here, this will be a weak change of character. Let me just mark it, change of character weak. And this will be a strong change of character. You have to wait for at least a strong change of character. So you can't open a position based on the weak change of character, because price is reversed in the middle of nowhere, right? So there was literally no demand tap. But even if there was any demand tap, you still have to wait for a strong change of character, because the trend, the main trend, is bearish. And you have to wait for a strong change of character in order to really reverse price to the upside, because there's a high probability that price won't reverse after the weak change of character. And basically, this weak change of characters in the counter trend can be actually considered as a liquidity collection. So this weak change of character isn't even a weak change of character, it's just a liquidity collection of this high point. And after a liquidity is being collected, it usually reverses on this last recent supply zone, reverses and continues the main trend to the downside. So this demand trade right here will be invalid. This demand trade will be invalid if price only creates a weak change of character. In order to take a counter trend trade like this, you have to wait for a strong change of character. And in this case, this trade is still being considered as risky. This is still extremely risky, because this is a counter trend trade. Every single counter trend trade can be considered as risky. But with enough confluences, with enough criteria, these trades can be played. But you just have to know that this is a counter trend trade and counter trend opportunity. So for example, if price creates a double change of character, a strong change of character, and creates liquidity for this demand zone and creates continuation trade to the upside, and doesn't mitigate a higher time frame / any POI / any opposite side POI, then you'll be able to enter in a freshly new created demand zone that has caused a double change of character, strong change of character to the upside. And you can only use these criteria, only use these entries if there are enough criteria. For example, the liquidity creation, for example, the strong change of character, for example, the continuation, no mitigation of the opposite side zone. And only in this case, you can use the counter trend trade. You can actually use this demand zone to enter in a trade, and you'll be able to target the next recent 15-minute supply zone, which you can expect a reversal on, right? Because right here at this region, let me just mark it out, right here at this region, the change of character has happened, right? So at this region, at the reversal point, this movement has happened, this movement has happened, this change of character changing movement has happened. And after this happened, you can target the next recent 15-minute zone, which is this one in this case, right? And you can only target this because the main trend is bearish and you're expecting this supply to hold price actually. And you can target higher supply areas because this is the main trend. You have to target the main supply zone that has caused the last recent 15-minute break of structure to the downside. So that's why we are always targeting the 15-minute zones and not the 1-minute zones, because price usually respects these 15-minute zones. But this can be considered really, really risky because there's a high chance that price won't even come up to this supply zone, won't even come up to this 15-minute supply zone and just reverse in the middle of nowhere on a random 1-minute supply zone, for example, like this. And you know that 1-minute random supply zone is this, where this strong change of character line lines up, right? So this random 1-minute change of character, supply zone looks like this on the 15-minute chart. So on the 15-minute chart, there will be nothing. But on the 1-minute chart, there will be a supply zone. And that supply zone more likely will be the strong change of character line. And if price can break above the strong change of character line, the trend will be continued to the downside. So more likely price will reverse on this supply and create the next break of structure, 15-minute break of structure to the downside. So that's how you have to wait a strong change of character in a counter trend trade every single time. So you can't just open a trade based on a, sorry, let me just remove these things. So you can't just open a trade based on a weak change of character in a counter trend trade. And I know I've said this several times right now, but I have to say this once again. So in the main trend, a weak change of character is perfectly enough because you are following the main trend and you are expecting the main demand to hold in this scenario. And that's why the weak change of character is perfectly enough. And in the counter trend trade, you have to wait for a strong change of character because you're expecting the continuation of the main trend. Okay, does this make sense for you? Was it understandable, guys?
Yes.
Yes.
Sorry. Let me just make this. Yes. No, just circle the one that fits you.
Yeah.
Okay, so it was understandable. Perfect. So,
But if you wait, sorry.
So this isn't a strong, hard concept. This isn't a hard concept, right? This is really, really easy to use and learn. But we still have to talk about this because I saw that lots of you guys are confused about this. But actually, this is being mentioned in the PDF too, that the change of character is the best to use when it breaks through two or several opposite side zones / high points / low points. So this is a really, really easy to use concept. And please mute yourselves because I can hear your background voice and somebody has a phone call. What's this? Dow, PT. What's this?
Sir, can I ask you something?
Of course. Let me hear the question.
Sir, if price, let's say price tapped into our 15-minute zone, it either be supply or demand.
Yeah.
If price tapped into that 15-minute zone, should we wait for the 15-minute change of character or 1-minute change of character is more than enough?
1-minute change of character. Okay. So let me put this in perspective again. After this session, I would like to ask you, I don't know who has this question, but I would like to ask you to watch the webinars because these are being explained in the webinars every single time. So but I will tell you once again, if price steps to 4-hour zone, you will have to wait for a 15-minute change of character, right? If price steps the 15-minute zone, which has been refined from a 4-hour zone, you still have to treat that 15-minute zone as a 4-hour zone. So you have to wait for a 15-minute change of character. If price steps into the 15-minute zone, which has not been refined from the 4-hour zone, 1-minute change of character is perfectly enough. If price steps into 5-minute zone, which has been refined from the 15-minute chart, you have to wait for a 1-minute change of character. Okay, but please just watch the webinars because these are being explained in every single webinar.
Can I ask a question, Marcel?
Yeah, last question, then we continue.
Yes. So the double change of character, we trade the pullback, right? So for that double change of character, strong change of character, do we need a demand tap 15 minutes from far left?
Yeah, that's stronger. if there's a demand,
Like
for
for
example,
example,
somewhere around here from far away,
yeah,
this
yeah,
price action region, that's stronger. That
yeah,
will be
far
stronger.
away.
That will be much, much stronger. But if price reverses in the middle of nowhere, so without the proper demand tap right here, that will be a risky
Okay.
trade. So it's much, much stronger if price taps this demand zone from far, far away.
Okay. Also, this concept can be used for 4 hours and 15 minutes.
Yes, of course, but the entry time frame is 1 minute. So we really care about these on 1 minute chart.
Okay, okay. Thank you
Sorry,
so much,
guys.
Master.
You're welcome.
Can
Sorry,
I
guys.
ask a question?
After the analysis, okay? Or okay,
Okay.
let me just go out for a glass of water. So just a minute, guys, then you'll be able to ask your question.
Guys, it's easier to say that you have to wait for a 15-minute choch inside of a 4-hour zone. No matter if it's a 15-minute zone, 5-minute zone, or whatever, if it's inside a 4-hour zone, you have to wait for a 15-minute choch.
Okay, I'm here. Let me hear the question.
Marcel, when we have a 15-minute POI and after that price make a 1-minute order block, how we do react on this 1-minute order block?
Sorry, what do you actually mean by this?
I mean, can I throw something like
Yeah.
this? We have a 15-minute zone. My drawing is bad.
Okay, not
It's a
never mind.
50. This is a 15-minute and price lower row and don't mitigate the 15-minute and make 1-minute order block. How we do reacted on this 1-minute order block?
This is part of the liquidity, as you can see. You even drawn the double taps, first tap, second tap. You can't open a position inside of a liquidity pool. So more likely these, this POI will be spread because this is part of the liquidity and the upper one will be tapped. Everything moved around liquidity, but please just watch the previous sessions because these are explained in every single session. So yeah, guys, please just take your time and watch the previous sessions. These sessions are almost every single session is 1 hour long. So just watch a session on every single week and you'll get better time by time.
Okay, Marcel, can I have a question? What's the meaning of LRZ?
Right here.
No. In markup, you say this one is LRZ.
Lunchtime
means,
rip zone, lunchtime zones, basically all lunchtime zones. Yeah, guys,
Thank
we'll
you.
move on and continue with the analysis because I have a meeting, a real estate meeting very, very soon. So I just want to finish before the meeting. So let's just start the analysis on the 4-hour chart and let's see what price is actually doing right now. Okay, what chart is this? Okay, perfect. Okay, so we're on the 4-hour chart, as you can see. The first thing we do is to check the news. Every single time we do the analysis, we check the news before. So as you can see, today there won't be any high impact news. So it's safe to trade today. You don't have to worry about anything because there won't be any high impact news today. Okay. Now that we clarified this, that there won't be any high impact news today, we can continue with the analysis. As you can see, prices broke below the weekly low point. This is the weekly chart, right? And this was the less recent weekly low point that has been marked on the markups yesterday. So prices broke below this weekly low point, as you can see. Let's just take a look at the weekly chart. And after I analyze the weekly chart, please just take a look at the markups because I believe 1 week ago I sent you a markup about the weekly outlook. So just take a look at that outlook, please. So as you can see, this was the weekly chart. Weekly chart is bearish, creating this huge inertial movement to the downside, creating this pullback, creating another breakout structure here to the downside, another low point. So this was a strong high point, right? Prices created a change of character on the weekly chart right here with this movement. After this strong change of character, after a change of character, prices stepped into a weekly demand zone right here. And this weekly demand zone couldn't create a new breakout structure to the upside, as you can see. After tapping into this weekly demand zone, price couldn't break above this high point. So meaning this low point has been proven as weak. As you can see, this low point, this inefficient push to the upside couldn't break above this high point. There was no breakout structure. So this we consider this is a weak low. What do we know about weak lows? That weak lows are being broken usually, right? So that's exactly what happened. As you can see, prices broke below this weekly low point. Price broke below this weekly low point right here at this line. And I believe the continuation of the bearish order flow on the weekly chart will happen. So I'm really expecting the break of this low point right here, because this low point was the origin of this inefficient push to the upside and inefficient bullish structure to the upside. But this can be continued, as you can see. The bullish signs are being weakened. So price can break above this high point. Supply is being respected after a supply inspection, creating a weak breakout structure right here to the downside. So I believe this low point, this weekly low point, will be broken sooner or later. I'm really expecting the break of this low point. Okay, what can we do actually with this fact? Double tap. Where? Right here? I don't care. This is this is far away. This is on December. So on the 4-hour chart, as you can see, this was the weekly breakout structure line. This line was the weekly low point, and price has broke structure here to the downside. So basically, this breakout structure has been caused by this 4-hour supply zone. Let me just zoom in to clarify things. So this breakout structure, this weekly breakout structure, has happened by this supply zone. Okay, let me just remove these things or just extend these things. Right here, perfectly lined up. Okay. So the last recent weekly breakout structure has happened by this 4-hour zone. What can we expect after a weekly breakout structure? If price breaks below a weekly structural point, what can we expect? We can expect an extreme pullback, right? I mean, not a pullback, an extreme up movement to some higher supply areas. Because let me just switch back to the weekly chart. So just follow this structure. Follow this structure. You know, every single time frame is fractal. Every single time frame is correlated. So price broke below this low point. With this movement, how do the structure actually looks like on every single time frame? If it's bearish, it's creating these movements, right? Creating these movements. If it's bullish, it's creating these movements, right? So just imagine, this looks like just a 1-minute chart. This weekly chart looks like a 1-minute chart, 5-minute chart, 15-minute chart. We don't care. On the 15-minute chart, you will see the same movements: downside, upside, downside, upside, downside, upside. So price created a breakout structure to the downside. So after this breakout structure to the downside, we can expect a pullback, right, to some higher supply region. And after the higher supply region, that we can expect another breakout structure. And this is how this structure market actually moves. Another breakout structure to the downside. Sorry, just make it more cleaner. Another breakout structure to the downside. Another pullback to some higher supply areas, another breakout structure, another supply pullback. So we can really expect a pullback to some higher supply area right here after the weekly breakout structure. And I believe if price can create a pullback right here to the upside and just simply continues the movement to break below this low point, then after the break of this low point, the extreme pullback to some really extreme areas will happen. So I can't really predict if price will just continue the movement to the downside without pulling back and breaking below this low point, or price will create a pullback to some higher supply area. I can't really predict this. All you have to do is follow the price action, right? How can you follow the price action? Let me just switch to the 4-hour chart. And that's why I marked the last recent 4-hour zone out. If price taps this 4-hour zone and creates a 15-minute change of character inside of this 4-hour zone, then I believe the continuation will happen and the break of that weekly extreme low point will happen also. But if price breaks above this supply zone, this 4-hour supply zone, and creates a change of character on the 4-hour chart right here, then I believe we'll see some upper pullback to some upper supply area, and that upper supply area could be this one still. I'm still expecting the top of this supply because there's lots of liquidity below this supply, as you can see, and this was the extreme of the bearish order flow. Okay, so once again, if price creates a 15-minute change of character on this zone, on this 4-hour zone, creates a 15-minute change of character, then the continuation will happen. The continuation and the weekly extreme low break will happen, in my opinion. But if price can't break above, I mean, can't change character on this zone, on this 4-hour zone, last recent 4-hour zone, and just steps this, creates a change of character to the upside, then I believe higher supply areas will be tapped. So after this, higher supply areas will be tapped, in my opinion. And the higher supply area could be easily this one up here, because there where the liquidity is. If price can create a breakout structure here to the downside, it has to collect more liquidity. Where's the liquidity? Here's the liquidity, right? If this liquidity is being collected, just imagine what could happen. If this liquidity is being collected, this liquidity is being collected, just imagine what could happen. Every single stop loss right here is converted into another short opportunity, I mean short position, and every single stop loss will be converted into another short position, and that will push price to new lows. This is how market moves. This is how market works, and this is how liquidity actually works. Stop loss is converted into new orders pushing price with another inefficient movement. So these are the two scenarios on the 4-hour chart. Is it understandable? These two scenarios? Sorry for my speed, but let me just put this right here. Sorry for my speed, but as I said, I'm in a hurry. Okay, it is understandable. Thank you. Clear all the drawings. Perfect. Thank you, guys. So these are the two scenarios for the 4-hour chart. Okay, let me just remove this and talk about some other scenarios. But before, let me just read the chat. Guys, please watch all the session. Look up the recap. Yeah, exactly, Philip. Thank you. All I'm asking is to watch the sessions. If you can't be here in the live session, just watch the recording. That's why I'm uploading these recordings, because these are really, really valuable. And I'm explaining every single thing, just like I do in this session. But I don't want to repeat myself in every single session. I don't want to repeat that you have to wait for a 15-minute change of character inside of a 4-hour POI, blah, 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 because that's tempting. That's not why I'm doing these sessions. There are all of the webinars that you can rewatch and you can learn from them. Just please rewatch them. Okay. At this point, you liquidity and for trading. Okay. So other scenarios. If price can tap this 4-hour zone and reverse is in the middle of nowhere, there could be a 15-minute zone right here. And after a 15-minute zone tap, it creates another 4-hour breakout structure. Then I believe price actually is in a strong bearish movement, strong bearish volume, and it doesn't even have to tap the 4-hour zone. It just can reverse on the 15-minute zone. So if price can reverse right here, I believe the weekly extreme low point will happen sooner. So if price doesn't tap this 4-hour zone, that's the strong sign of the pressure of the the bearish pressure, right? So if price creates another breakout structure here to the downside without even tapping this 4-hour supply zone, then we can really expect the continuation of the bearish order flow, and you can just actually press this sell button anywhere at the chart and you'll be profitable. But this is a joke. Don't do this. Don't do this. This is a joke. So yeah, let me just switch to the 15-minute chart and let's see how price action actually looks like. Okay, it's pretty clear. Let me just close these zones a little bit because these are too huge. And I want my charts to be clean. I hate messy charts. Okay, remove this one too. So this was the last recent 4-hour zone. Last recent 4-hour. That's it. This is no, I can't type. Where's the extreme? This is the extreme. Okay. This is decisional too. So, okay. This was the last recent 4-hour supply zone that has caused the weekly breakout structure. Do you remember? This 4-hour supply caused the weekly structural break to the downside with body closure. I mean, on the weekly chart, there wasn't even a body closure because there's still 2 days left from the week closure. So we have to wait 2 days to see if this was a body closure or just a liquidity collection. Because as I said, timeframes are fractal. Every single concept works on every single time frame. You can use every single concept on every single time frame. So we have to wait 2 more days to see if this was just a liquidity sweeping movement or a body closure breakout structure. So, but by this perspective, prices broke below this weekly low point by a 4-hour body closure. Okay, what else can we see right here? We can see that below this 4-hour zone, there's a perfect liquidity, right? We can all agree on this one that there's liquidity. I will mark it this as a liquidity line. So here's a liquidity line built up just below this 4-hour last recent zone. Okay, what can we expect here? As you can see, prices tapped this 15-minute decisional zone. Prices tapped this 15-minute decisional zone. And if you remember, this scenario was explained at the beginning of this session, right? Because there's a chance. That's what I meant by the strong and weak change of characters. That's why I said that price can easily reverse by not tapping the extreme zone. So this is the extreme zone. As you can see, this is how the structure looks like. This is the structure, right? This is the extreme zone, and this is the extreme zone. And there's a chance that price won't even come up to this extreme zone and react on some deeper area. For example, this 15-minute zone, less recent 15-minute zone, and prices react on this 15-minute zone, as you can see. So there's a chance that price won't even come up to this extreme zone, won't even come up to the 4-hour extreme zone, just reverse in the middle of nowhere. I mean, in the middle of the movement, right? There's a chance, and you're following the main trend. I really recommend you to only open short opportunities in these days, because the trend is extremely bearish. So what can we see on the 15-minute chart if we just zoom in? You can see that price is reacting on this zone. You can see that this zone is part of the liquidity. I mean, that's liquidity. That's unarguably a liquidity, even a liquidity trend line, even a double bottoms. I mean, taps, sorry. So what else can we see? You can see that this upside movement and reaction on the supply zone couldn't create a new low by a break of structure, by a body break, right? So that was just a week below. This isn't a break of structure. So this might be a sign for the weakness of this supply zone. What else can we see? We can see that price reacted on some sort of supply zone here again and created double taps. And it's on the way down currently to create a break of structure. We have to see if this movement can create a break of structure or it can't create a break of structure. Okay, and here comes in part the counter trend trades. And this will be a perfect example for the counter trend trades that I was explaining at the beginning of this section. Because if this movement can break below this low point, can create a break of structure here to the downside, can create this break of structure, then I believe a continuation to this supply zone will happen. Because if price can push, price can, sorry, stroke. So if price can create a break of structure for the second attempt, then I believe it has to collect more liquidity. And where's the liquidity? Here's the liquidity, right? And here comes in part that I was explaining at the beginning of the session. This is a counter trend trade. So there will be a demand zone somewhere around here. And this will be a counter trend trade. And you will need a strong change of character to the upside. And after a strong change of character, and after the perfect entry criteria creation, you'll be able to execute a long trade up to the 4-hour supply zone. Let me just change the color for this and for these two. So after the liquidity creation and criteria creation and strong change of character, you'll be able to target this 4-hour zone with a counter trend trade. But you still have to know that this is risky. This is considered as being risky because it's a counter trend trade, counter trend long trade in a really bearish structure. So I don't really recommend you to open long trades. I recommend you to only wait for short opportunities. I really recommend you to only wait for short opportunities because those are the highest probability setups. So what happens if price, I explained the first scenario, if price creates a change of character, strong change of character right here. This is the first scenario. The second scenario is if price breaks below this low point, creates a break of structure here to the downside. What will happen after this? There will be a break of structure, right? What will happen after this? The supply zone will be up here. And by following the trend, by following the plan and following your bias, price will have to come up to the 15-minute zone, right? But this 15-minute zone is part of the liquidity line right here. So if this movement happens, so the break of structure happens to the downside, price will come up to this supply zone. And actually, it won't reverse on this supply zone, I believe. It will just create a sweep of this liquidity. And from this 4-hour zone, it can continue the bearish movement to the downside. These are the two possible scenarios for the 15-minute chart, I believe. But as I always say, all you have to do is react, right? All you have to do is react. And as you can see, price is creating actually a downside movement. Let's just see if this will be a breakout structure or this will be just a liquidity sweeping movement, because you can still consider this as a liquidity. And let's see if this 15-minute candle can close below this liquidity line or it's just a liquidity sweeping wick. We have to see. If this is just a liquidity sweeping wick and it doesn't close below this liquidity line, then price will come up to this 4-hour supply zone. I'm 100% sure. Because if it can break below, it has to collect more liquidity from the upside. It has to collect more sell-side liquidity. This is the sell-side liquidity, and if price collects the sell-side liquidity, all of the orders will be converted into new orders right here at this order block, and the new inefficient push can happen to the downside with the break of structure. So these are the possible scenarios for the 15-minute chart. Was it understandable? Okay, perfect. No, I want to prove you. So 15-minute scenarios have been shared. Let's see the 5-minute chart, which is exactly the same as the 15-minute chart. So there's nothing much about the 5-minute chart that's different from the 15-minute chart, because as you can see, the 5-minute chart couldn't even break below the low point here. This was just a week below 2. And there was a change of character to the upside here on the 5-minute chart. As you can see, this was a character changing movement, liquidity built up for this deeper demand area, and price is currently inside of this deeper demand area. As you can see, price is inside of this demand. So this is a turning point. If price can create a strong change of character here to the upside on the 1-minute chart, then I believe we'll tap this zone. If price will sweep the liquidity to the downside with a liquidity sweeping candle and not body closure, then we'll tap this supply zone up here. If price can break below this breakout structure line with body closure, then we'll tap this supply zone. So all of my plans, all of my expectations are leading up to this 4-hour supply zone. So I'm really expecting the tap of this supply zone. And as I explained in the 4-hour chart, on the 4-hour chart, if this supply zone is being tapped, there are more scenarios. So we have a plan for every single time frame, right? We've built a plan for the 4-hour, we've built a plan for the 15-minute, we built a plan for the 5-minute. So we have a plan for every single higher time frame. Right now, all you have to do is wait for a candle closure on the 15-minute chart. And basically, you can't really act right now on the 1-minute chart, because if I switch to the 1-minute chart, this will be just a massive structure. As you can see, this is all liquidity, this is all lunchtime area. This is a mess. We need a 15-minute clear confirmation by this, right? So I'm really expecting a liquidity sweep on the downside and the upside too. And on the meanwhile, you'll be able to trade counter trend opportunities up to the supply zone, but those are considered as being risky. There's also a chance that price will reverse on this 15-minute zone, but all you have to do is follow the structure. Okay. Let me just switch to the 5-minute chart. Well, let's see if there's anything more. Let's just mark the 5-minute zones. Actually, here was a change of character to the upside, breakout structure, pullback, another breakout structure, last demand zone, flip of this demand. I mean, from this movement, price has created the change of character. So we will have a 5-minute extreme supply zone up here that has created the change of character right here. And we can expect the top of the supply zone, but the supply zone is part of the liquidity line, as you can see. So this scenario is leading up to the supply zone also. Another scenario, there's actually any inefficient area right here, because every single candle right here at this movement is efficient. Yeah, but that has been already mitigated, as you can see. Let me just check if that has been mitigated. Yeah, this has been mitigated already. So there's no inefficiency also. There's no inefficiency. The only inefficiency can be found between this candle and this candle. As you can see, that's not much of an inefficiency. So basically there's a dog shit inefficiency. This isn't even inefficiency, but that's the only inefficient price action area. There's no inefficiency. There's no inefficiency. There's no inefficiency. No inefficiency. No inefficiency. No inefficiency. Maybe right here. Yeah. That's the only inefficient area. If you're not sure where the inefficiency has kicked into the market, just mark your candles like this. So this is the easiest way to track the inefficiency. Just take a candle, for example, like this one, mark the low point out and mark the third candle's high point out. So not the next recent candle, the candle after the next recent candle. So the third candle. So as you can see, the low point and the high point meets in the middle. No inefficiency. Take this candle as low, take this candle as high, you'll see that there's inefficiency. So actually the inefficiency has kicked into market from this candle. So there's only the inefficiency. So little inefficiency can be found right here and much inefficiency can be found right here. And yeah, that could be also a flip zone. Thank you for marking it out. This was a demand zone because every single inside bar is a demand zone. As you may know, here was an upside movement, downside movement, demand zone, and from this demand zone, this inefficient movement has started. And this supply zone, I mean, this candle was reacting on this demand zone, as you can see, coming down, reacting, and from this supply zone, it has been flipped. So this is a less than 5-minute supply zone. And guys, you just see how I analyze the market, right? You just see what I'm doing. If I'm analyzing the market by myself and not in live session, I'm doing the same things. I'm just going over the candles by myself too and seeing, okay, there's inefficiency, there's no inefficiency, where's inefficiency? And by saying these things out loud in myself too, because that's how you actually improve. That's how you realize things. That's how you know where the inefficiency is, know where the supply zone is, know where the demand zone is. So just please talk in yourself. just don't care about anything, just talk in yourself. That will help you to understand the concepts faster, because if you say it out loud, your brain will realize it faster. Your brain will actually realize if you not just think about it, but say it out loud. Okay, so this is the less recent 5-minute. So let me just mark it out. This is the less recent 5-minute flip zone. And yeah, this shows new options for us. This shows a new option. If price can tap this supply zone and create a change of character right here, then we'll be able to target the liquidity line right here. We'll be able to target the liquidity line. So if once again with arrow movements, if price taps this zone, creates a change of character right here, we'll be able to target the liquidity line with a short opportunity. If price breaks above this supply zone, for example, creates a flip scenario, then you'll be able to enter on a flip scenario right here on this demand zone, and you'll be able to target this supply zone up here. But this movement is counter trend movement. Just realize that this is a counter trend movement. Okay, guys, this is really, really, really important, that every single long is a counter trend movement. So I'm mainly aiming for shorts. I'm mainly aiming for supply opportunities, and I'm mainly aiming for this supply to create a change of character. I'm mainly aiming for this supply to create a change of character. And yeah, this is the lunchtime zone. This has been formed in the lunchtime zone, so we can expect a break of this, but we can also expect a reaction on this. We can't put a direct order on this supply zone, but we can expect a reaction on this zone. Okay. Understandable or not? Let me just go out for a water again.
Yeah, cool, guys.
Okay, I see you're having fun. Remove it, please, guys. Thank you. So, yeah, these are the possibilities lined up for us. Now, what can we do? We can just remove this biggest circle from here, please. I don't know who it was. Just remove it. Thank you. So, we created a plan. Okay, then I will remove it by myself. Please, guys, if you draw on my screen, just remove the drawings, because it takes time for me to remove them, and I want to spend that time with analyzing. Okay, sorry, I'm just eating a banana. So we've created a plan for every single scenario, right? We have a plan for the 4-hour chart. If the 4-hour zone is being reached, we have a plan for it. We have a plan if price doesn't reach the 4-hour zone and the reverses to the downside. We have a plan for the 15-minute sweep. We have the plan for the 15-minute breakout structure. We have the plan for the 15-minute change of character. We have a plan for the 5-minute sweep. We have a plan for a 5-minute change of character. We have a plan for a 5-minute supply tap. And now all we have to do is wait for a 1-minute confirmation inside of these zones and according to our plan. You're using the 1-minute chart for confirmations. You don't have to leave on the 1-minute chart. If you're leaving on the 1-minute chart, you'll get stuck, you'll get swept, you'll get fucked. Sorry for my language, but that's true. If you're living on the 1-minute chart only, you'll get fucked for real. The market will fuck you. And that's why you have to always switch to the 15-minute and 5-minute to see the higher time frame perspective. And if you're living only on the 1-minute chart, you'll be liquidity. Combining the 1-minute chart knowledge with the higher time frame is the real shit. If you're combining the 1-minute with the higher time frame and you know what price is actually doing, and you have a plan for every single higher time frame scenario, then you'll be a killer on the 1-minute chart, because you'll know that, okay, there's this zone and we can expect a reaction on this on the 1-minute chart. And the 1-minute chart is only the confirmation time frame, not the leaving on time frame. Yes, no, understandable? Okay, no, actually, don't draw. Just say it out loud. Say it out loud with your microphone.
Yes.
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 Understandable.
Okay, one more thing. I want you to say it out loud that I'm not going to leave on the 1-minute chart. Say it out loud.
I'm not
I'm
going to
not
leave on
going
1-minute
to
chart.
leave on
Only
1-minute
the
chart.
1-minute chart.
Perfect. Thank you. Yeah, because this is really, really important, because
for shots.
you are being confused by yourself. You're confusing yourself by living on the 1-minute chart. And yeah, it could be really, really confusing. It is confusing as fuck. That's why you have to switch to the higher time frame every single time and know the higher time frame perspective. And that's why you have to build a higher time frame plan. You have to build a higher time frame plan because, you know, I'm doing this membership. I'm sending the markups for you every single New York session, right? I'm sending the updates. You think that these things aren't helping me, but these things are helping me so fucking much because I'm forced to create these markups. I'm forced to create these updates. And by knowing that what price is actually doing by creating a deep down markup, it's helping me to actually trade. And it's helping me to follow my plan more disciplined. And that's why I really, really recommend you to actually do the same thing as I do. Just before every single New York session, sit down in your chair, take a look at your monitor / laptop. I don't know what you're training or mobile phone, and do the same analysis as I do. Don't rely on my markups. Compare your own markups with my markups. And if you compare your markups with my markups, you will learn from them. You'll learn from it. Because if you have the same markup as me, then you'll know that you're doing something great. And I'm not saying this because of ego that I'm creating the perfect markups. Of course, I have bad thoughts too. I can create bad markups too. But if you have the same markup as me, then you know that you're improving. And if you have something different on your markups as mine, then you'll know that, okay, I will learn from this and I will ask Flipping, why did he mark this? And actually you don't have to ask because it is being explained on the markups. So just please do your markups before every single session. Take your time, take 30 minutes before the session starts and do your top-down analysis. Do it. And after I post the markups, just compare your markups to my markups because that's the easiest way to learn this strategy. And yeah, guys, that's it for this session. Sorry, guys, I have to leave for a bit because as I said, I have a real estate meeting and I don't want to be late from that. So yeah, there won't be a question and answer section for this session. And I just stopped the recording, sorry.